Let me tell you something. I've been a rich man and I have been a poor man, and I choose rich every fucking time.
Welcome to Market Makers, everybody. Your home for tomorrow's TA today. Often imitated, never replicated. Happy Thanksgiving to all the Americans out there. What does that mean for the markets? It means Thursday, the markets are closed. Friday is a half day. And the translation for the markets is most likely a low volume week. Now, what does that mean? It means retail can make the markets drift up higher. A couple of big institutions could decide to take profits and they can send the markets down lower. It's potential volatility. As you guys know, where we are in the markets right now, trying to push up in the S&P, trying to push up in the NASDAQ, trying to retest the highs. Bitcoin ever so close, within a couple hundred points of kissing that 100K, our long predicted target. Guys, there's a lot going on in the markets, but I always implore you to understand the market cycle, because we're looking at building these massive tops for the incoming imminent recession cycle. And, I wanted to take a second and talk about Warren Buffett. Been talking about him way more than I like to talk about him these last, couple of months as he builds his cash position, because once again, he's at a new all-time high of 325 billion with a B dollars. Lee, throw up that Warren Buffett slide. Guys, take a look at this. Lee, go ahead and highlight the blue lines there right before the dot-com crash. The blue lines are Warren Buffett's cash position. Now, this comes from Bloomberg. Now, Warren Buffett fancies himself as somebody that's not a market timer, but this graph says something completely different. This man builds up massive cash positions before each of these bubble collapses. So let's look at this. Dot-com crash, new all-time high for Berkshire Hathaway for cash. You get the dot-com crash, then the cash position goes back down to a historic low as he starts to sell and build it up again for the financial crisis. Now, one thing you'll notice, he's not nailing the tops, right? He doesn't plan to. There's different ways to track how overvalued the market is. You guys know versus GDP, most expensive market in history. Warren Buffett indicator at an all-time high for the market being overvalued. The Shiller PE right now, modern market, third most expensive market in history, about to become the second most expensive market. So looking at that financial crisis, as the market drops 57%, Buffett starts buying things. That's what he does. Go over to the right, 2024. Yet again, another new all-time high in cash, $325 billion. Gee, what's Warren Buffett waiting on, Lee? What do you think he's waiting on? I think he's waiting on a massive sell-off. Let's go to the next slide, Lee. This is the impact of losses. You guys need to be aware of this. This is from Ned Davis Research. So understand, the average bubble decline is minus 50%. A lot of people think just mentally, well, if you go down 50%, then you go up 50%, you're even. That's not how the market math works. Look at the bottom there, minus 50%, the market has to go up 100%. What about what we did in the GFC? S&P fell 57%. Let's look at minus 60 there. Minus 60%, the market has to go up 150% to be even. What did the NASDAQ do in .com? Minus 80% there on the bottom. The market has to go up 400%. What does that mean in real terms here? That means after .com, it took 7 years for the S&P to make a new all-time high, the 7-year cycle, and then you're smack dab in the beginning of the GFC cycle. After .com, the NASDAQ declined 80%. It took 13 years to come up to a new all-time high. But remember, it's not about timing the market, Bob. It's about time in the market. They tell you if you missed the 12, 13, 14 biggest up days in the marketplace, you miss out on all the gains for the year. But why would that be? Look at the bottom of this, guys. Since 1901, The stock market has spent 76% of the time declining in value or recovering from loss. You've only made new highs 24% of the time. Do you think Bloomberg or CNBC are going to tell you that information? Of course not. Why would they? Remember, the money managers, Wall Street is at record all-time highs for bonuses. Timing the market is difficult. Most people cannot do it. 84% of professional money managers cannot beat the S&P over a 10-year period. As a matter of fact, if you're really good at trading, you are known internationally. You're known around the world. Stan Druckenmiller, billionaire trader, averaged 30% returns over 30 years. Do you think a big company like JP Morgan, Bank of America, Merrill Lynch, do you think they're going to train tens of thousands of employees on how to time the market? No, because fact of the matter is most people can't do it. 80% of traders, just retail traders, lose money. The easiest sales pitch is just buy and don't worry about it. The part they leave out is 76% of the time. 3/4 of the time, you are only recovering from losses or you are declining in value. They always leave that out. And when you're at the pinnacle of a bubble, which I believe we are, understand that timeline to recover those losses takes years, in some cases, decades. Be aware of that. Nobody's going to warn you about this. Nobody's going to tell you about this. This is all about common sense. You don't need to time the market perfectly. Look at Warren Buffett. He's been selling since a couple of hundred S&P points ago, sitting on a record cash pile, all-time high of $325 billion. He's doing that not to time the market because he knows what's coming. It's obvious what's coming. Why is it obvious? Because every single recessionary indicator with 100% accuracy since 1953 tells you you're getting a recession. And what does that mean to the layman out there? That means the S&P will do what it has always done, which is decline an average of 33%, and it has always taken out the cycle low. The cycle low is 3,500 on the S&P futures. Do you know what that means? That means you're going below 3,500 when the reality of the recession sets in the marketplace. What was Bitcoin's cycle low? 15.5. Do you think if the S&P takes out 3,500, Bitcoin's going to just hover around 100K? No, it is not. But YouTube doesn't want you to think that, because right now you have big YouTubers out there talking about, once again, 1 million Bitcoin, S&P 8,000, S&P 9,000. It's always just going to keep going up. It's always a soft landing every single cycle until it's not a soft landing, and then the market will collapse, guys. And that first move down will be swift. We're going to look at it in the charts. It's related to the DXY. I believe that first leg down will be very, very swift, and they're going to tell you to buy the bottom. It's going right back up. So, guys, we're going to look at all this information in the charts. Be sure to like and subscribe. If you want to come and hang out with us, become a Market Maker member, join our Discord, guys. Check out marketmakers.trade. That's our website. I'll pin it in the YouTube comments, marketmakers.trade. You can join our Discord, get our trade signals, get our TA, be with a fantastic community, or you can join the website exclusive package, get all that same information available on the website. You can try them both out for a week, see if you like them. Doesn't cost you anything. Cancel anytime within that week. And guys, Lee, let's go ahead and start this show. All right, let's start off on the Shiller PE, everybody. So here's a Shiller PE. This is a 10-year inflation-adjusted PE, also called a CAPE ratio, 38.07. If we take out 38.58, it will be the second most expensive market in history after the dot-com. This is important to understand. Let's start off with Bitcoin, because Bitcoin has been going and tracking exactly to the numbers we've been talking about for months on this channel. On weekly time frame, guys, just as a quick recap, we have the wave symmetry, 106%, 102%, 91, And of course, 101, giving us an average of 100% moves in the waves. And what did we hit? 98,742. Very important. Wave symmetry. Now we're retracing some off of this. On our Discord, we've had a long to trade for Bitcoin since 61K. And now there's a short that was posted up here in the 98, 99K region for this little bit of a drop. Could just be a scalp if Bitcoin comes back up, but it's a nice little move right now in the marketplace. Exit strategy, one of our traders has been absolutely killing it with these Bitcoin moves. So let's look at this on the weekly time frame. Guys, weekly time frame, we have nothing more than a large W pattern here that formed. And again, we can express this by pulling a fib retracement from wave 3 to wave 4, giving us the 98,755. And of course, we hit the 89.2 that we predicted, hung out there for a little bit over a week, and then accelerate it to the next level up at 98,755. Can we break out to get to 114? I think it's going to depend on the markets if they can come up and make new all-time highs with some authority. If the dollar stays calm, I think you could, but you could also be building a top right here locally in this area. Okay, so we're going to be watching this area very close. Now, depending what exchange you use, some exchanges you may have hit 100K. On the ones I'm using, you haven't hit 100K yet. You got within a few hundred points. Looking at Bitcoin on the 4-hour time frame, so looking at the little short up here at the top to where you are now, a nice 3,800 point drop, just about 4% drop on Bitcoin. You want to hold this ceiling here at 93,381, this nice accumulation range, and you may not even come down to it. You may be waving back up in this low volume week in the markets, but your key resistance remains 98,755. Next level up, right? Next key little level up just above 100K is 102. So that's the next little level up, but Bitcoin is selling here on the Sunday as I'm recording this video. So watch these levels. Watch 93,381. Want to stay above it. See if you can come back up, take out the high, 99,650. See if you can take that out and hit that 100K. Maybe get stalled out once again at 102. We'll be watching that here on the charts. What about Solana? I had my Solana long from 208, guys. We broke out above the range we talked about. Had a nice gain here in Solana. My next level take profit target was 250, and we got above the 250 all the way up to 264. I update it. Everybody let them know. I would like to see this hit 272 as an alternative target. Did not quite get there, but this is still very nice pumper trade on Solana. 26% gain, got 18 or 20% of that gain within the first 48 hours of that trade being posted. Watching Solana here, see if you start hanging out, see if you can get up to 272, or if you start topping out, building some type of topping formation on the daily time frame. You broke out, you made a new all-time high, you got above your trading range, and now just like Bitcoin, you kind of stalled out. We'll see if it's a cooling off period or if it turns into a pattern that may be tradable to the downside. Let's look at the DXY. This is a big problem with the vexing the stock markets right now. Is the DXY. Guys, something I want to show you here. Look at what the DXY is at. 107.479. You're at 107.490 right now. You got all the way up to 108, okay? Now, keep this in mind. This is important to understand. You have this long accumulation range, building momentum, building energy for a breakout to the upside. But something to pay attention to, this is the highest you have been in the DXY since November 2022. Does anybody remember where the S&P was around that time frame, where Bitcoin was around that time frame? Back in October, November 2022, Bitcoin was 15.5 the last time the dollar was flirting with 107, 108. The S&P was at 3,500 the last time the dollar was at this level. Again, important to understand what's happening in the marketplace. If you continue this breakout from this trading range, especially as you come up to 109, if you come up and challenge 114, guys, this is very bearish on risk assets as the dollar gains strength. This is the institution selling, going to cash. This is Warren Buffett going to cash. This is the dollar gaining momentum, and risk assets will be punished. Now, something I want to show you guys when we look at this on the 10-year, again, the downward trend continues. You're hung up at the 618 at 4.48. Let's move forward and look at this. The VIX dipping down some. We could be coming back to the baseline, that low 15 range during this holiday week, and then spike back up after that. So we're going to have to watch the VIX. You look at this, the $6,100 question, quite literally, on the S&P futures is, can we get to 6136, complete our giant ABC? We hit a lot of key metrics if we complete that giant ABC. Your 180% pivot point on the circle off the pandemic low, your 75% gain, 3/4 of the circle off of your retracement cycle low here, the 3,500, okay? Key inflection point, 6136. We're going to look at this with some other tools. Fibonacci pitchfork here, guys. If we come up to the 618, or to the 786, I should say, in the pitchfork, on this upcoming week, that's around 6,080. That's another hit on the 786 as it's an ascending line. We have a pattern there as well, as you guys know, the large W pattern. And from a cycle perspective, that's 111 days, or 111 bars, 777 days from the cycle low. Again, this can easily be a pivot top, okay? This is a pivot potentially in the marketplace next week. We could be pushing up to that high. So let's break this down a little bit. Let's look at this versus 2007. I want to show you this versus 2007 here in the marketplace. This is important to look at. Really, I just want to look at the 2007 here on the left, because when we talk about a swift decline, look what happened here in 2007. We had the same identical Fed funds rate, 5.25%, the same identical rate cut on the same identical day, September 18th, 50 basis point, usually reserved as an emergency panic rate cut. Remember, the average within the first 200 days of a rate cut, the S&P's down 23.5% on average. That encompasses .com, GFC, 1987, Nifty 50, Volcker crash in 1980, and encompasses a lot of market crashes when the Fed does that first rate cut, okay? So the first rate cut, and we look at our peak here in 2007, October 2007, two things I want to show you. The recession started in December 2007. Now, you didn't know that in December 2007 because the NBER, the National Bureau of Economic Research, that declares the recession, did not declare the recession until December of 2008. That's right. They backdated. So December of 2008, they said, you know what? Looking at the data, we actually started the recession in December 2007, just a few months, just 3 months after the market peaked. But look at the swift decline. You make your market peak, you decline almost 11.5% in 47 days. Roughly 6 weeks, you fall 11.5%. Swift decline. What about when you come down here? And roughly a 21% decline in just over 3 months, a 21% decline. This will happen quickly. And really, when you look at this, remember, what are the professional money managers looking at? They're looking at these base rules, right? A correction's 10%, right? 10% correction. So to them, when you declined 11% right here, this is normal. It got bought. What happened? You make a double top, an M pattern. Then you decline 20%, right? Now you're in a bear market and a market crash. Now there's panic. Now there's fear. The key is that first move down. And what you did here was just nothing more than an ABC. That's all you made here was an ABC towards the decline. When you look at this, right? You have your market peak. You go down 10%, 11%, it gets bought because that's totally normal. It's expected. Then you make another bearish pattern and all of a sudden you're down 21% in the marketplace. And then this gets bought, you have volatility, and then it rolls over again. And ultimately you end up down 57% in the marketplace. That first move happens swiftly. That's why it's important to understand these key levels of resistance we're looking at in the charts, because that first 10% drop is going to happen in a period similar to this, I believe, 6 weeks, 7 weeks, 8 weeks, maybe sooner than that. Could take about this amount of time. But when you decline 21%, guys, the ball game's totally changed. And that first leg down, understanding what's coming in the economic front is very key. go back and watch my previous video. I covered a lot of these indicators in the market. When we look at the ES, what does that mean for this upcoming week? A couple of things. Looking at our kill box up here, I just want to show you this. Key levels to watch. Pulling a fib retracement on S&P futures from 6,053 down to this new low right here. You have the rebound. You cross the 618 at 59.77 to 786 is 6,010. You need to take out 6,010 to come out and take out 6,053. Why is that important to take out 6,053? If you can do it, you want to come up and complete the giant ABC at 61.36. And of course, I have the target of this giant W pattern here, which is also visible on the weekly time frame at 6,092. Been rounding that up to 6,100. So 6,100, 650. I believe that will be the final top. Now look at this from a cyclical perspective of lunar cycles here. What's interesting, remember we had this top here, full moon, right? We rally up into the full moon. It goes sideways here, chopping around. The new moon was the final top, slightly higher by only 75 cents, but slightly higher. Then you got the retracement. So when full moon, new moon drop, other times you had one lunar cycle and then it drops it. But look what's coming up. December 2nd is your new moon, right? So you started selling off before the full moon. You're rallying back up into the new moon. You could very likely have this exact same pattern, full moon, new moon top right here. Okay. So this upcoming holiday week, maybe you get the drift either to a lower high, you top out, or you drift up into this higher level, 6,092, 6,136, get the new moon top right around that date. Then you build your top and then you drop. And I think that's a wrap at that point for at least a large move down, a 10% retracement all the way down to a big leg. Get your 10% drop, 8 to 10%, get your rally back up. That rally fades. And then if the rally does not take out the high once again, you get your ABC and you look up and you've been away from the charts for a couple of months and all of a sudden you're down 20%. That's how it happens, guys. That's how it happens. Let's look at the SPY real quick. SPY key resistance level is 599 at the 1618. If this was to overspill here and come up because the S&P futures goes up, let's look at some other targets here. 1732 is 605. So I'll be looking at 599 to 605 if you can take out your all-time high. See if it fades in that region. If for whatever reason the S&P just keeps running, my next level 200% move would be 620. So watch these key levels on top of it at the immediate level here, 599, 605 on the SPY for key resistance. What about the Dow? The Dow had two huge up days trying to come up and take out its high. Again, the Dows were going to be representative of the S&P. You can see the lunar cycles playing out here as well. Full moon top, new moon bottom. Full moon sold off just before, rallying back up into the new moon. Think it's going to give us a double top situation again. But the Dow is very close on the futures to making a new all-time high. I think it made a new closing high in the cash, but it's very close to making a new all-time high. But let's pull a fib here. From your current all-time high, 44,625. That's your key level. You're above the 786. You're trying to push up the 44,625. If you can get above that, you want to look at the next level up there at 45K, right? That would be your false break to the upside if the Dow can do that, or if it just starts to fade here in these boxes. We'll see how it plays out because the S&P is really struggling at that 618 level on the S&P to the 786 level. So we'll see how the Dow plays out. Let's move forward. Looking at the NQ futures, again, big moves here in the market, quadrupling off the pandemic low, up 210%, a doubling off of the cycle low, up 100%. Key resistance remains on your giant ABC, 20,623, 150 points or so above that at the moment. When you look at this on the daily, what's the key levels here of inflection? You're struggling at the 50% retracement. 20,974 is a 618, 21,135 to 786. See if the NASDAQ ends up topping out once again before the S&P, because the NASDAQ topped out November 2021 with Bitcoin, with the Russell, and the S&P ran till January. So we could have a similar situation like that with the Dow and S&P continuing strength and the NASDAQ really struggling here in these ranges. Watch these ranges for resistance on the NASDAQ. NASDAQ. Guys, triple Qs, what does this mean? Very similar thing. Let's pull a fib here from 3 to 4 on the triple Qs. If we look at the triple Qs, 1618, 508, and of course the 1732, 512, really 508 and 522 are the two levels I want to watch here on the triple Qs. If you start fading around 508, 510, all this resistance right here, see if you can flip the high. If you can flip the all-time high, then I'll be watching up there towards 522. Let's go ahead and move forward. Moving forward on NVIDIA, this 1618 has been holding beautifully on our W pattern. Looking at NVIDIA, 1618, 149.99. You tried to spike up above it. You got to almost 153, got a false break, sold back off. Guys, this is still an uptrend, but if this starts breaking down below that fractal low here, right around, what is that? 137. If you start breaking this, you're coming down to 131. You break 131 and you're coming back down. And as a matter of fact, we can go ahead and get fib targets on this. If NVIDIA continues to show signs of potential weakness after that false break to the upside, you'd be looking at 126, 120 for the 618 on NVIDIA if it can start breaking down below these key fractals, the largest stock in the world, important stock to watch. You need to see if it can hold above 137 and 132, or if it's going to drop down into the 120s, be a bad omen, a black canary for the marketplace if it starts to do that. If it wants to break out back to the upside, well, as you guys already know, the upside of 153, you need to flip that, and you need to go up to 161 would be the 200% move to the upside. 149.99 is your key resistance level at the 1618. Look at Tesla. Tesla tried to break out above this fractal. It did not do so. It sold back off that fractal at 358. So again, Tesla, to me, if it breaks out above 358, you're looking at 400 on Tesla. If it starts breaking down below 330 and then takes out this fractal down here, you're going to have a double top form at 309, and then you're coming back to that 300 region for support. And if that doesn't hold, you're going back to the 271 region, 265, 270 region. So you want to watch and see if this little double top here breaks to the upside, right? Comes up like this, find support, or if it ends up doing this and breaking down below 309 and coming down and retesting this high mid to low 270 range if that double top broke down. Let's go ahead and move forward. Looking at MSTR, MSTR is trading at a 3 times valuation of actually the amount of Bitcoin that they held. I think their earnings are actually negative at MSTR. They sell some shitty software or something and they have negative earnings, but they own a lot of Bitcoin. But the valuation was you're trading at like 3 times the amount of Bitcoin you own, and you had a massive reversal day in this bar of a high of 543 and a low of 371 in a day. In a single day, you found support right above 383 here, and now you're stuck between 383 and 459. So again, this is a daily time frame, but just watch and see how this chops around in here. See if it ends up chopping around in here, building some type of pattern up or down that's tradable. 557 was the 1618. You got all the way up to 543, almost got there. If Bitcoin continues its run, it could certainly get there. And then, of course, you want to hold this 383 level. If you do not, then watch the low 320s to come back and test this range here on MSTR. Look at the DAX. The DAX I want to see take out 19,445 and come up to 19,602. Fade out in one of these two boxes. Let's see if the DAX can do that move. If it can flip them, and it continues to rise up above 19,802, then we complete our giant ABC up at 20,160 to complete the giant ABC that the NASDAQ completed and that I would like to see the S&P complete. That'd be beautiful for the DAX. Let's finish off on the ASX for our Aussie friends. ASX, I have my giant ABC up here, or my giant W pattern up here, the 1618, 8404, and our smaller W pattern up here. 85.17 is the next target I'm looking at here. 86.37 if it continues to rise. Watch these levels on the ASX. And again, I would be using this in confluence with what the US markets are doing. Guys, hope you enjoyed the video. I answer your comments as always. Have a fantastic family Thanksgiving, guys. See you next video.